On this episode of After Earnings, DraftKings, the sports betting platform that makes a bet of its own by expanding into a broader for-money entertainment company. Well, today I'm joined by Alan Ellingson, DraftKings Chief Financial Officer, in his first ever podcast. And we discuss the rollout of a new super app that integrates multiple products. That includes lottery, casino, and sports. We chat through competing with black market gambling and offshore sportsbooks that don't pay state taxes. Plus, of course, we explore the company's move into prediction markets, new regulations, and how the company is trying to avoid the cannibalization of its sports betting offering. Let's get into it. So, Alan Ellingson, Chief Financial Officer of DraftKings, thank you for joining off the back of earnings that came in pretty strong. Just hit the highlights for us if you don't mind, and then we'll dig into some of the detail.
Yeah, look, revenue up 17% year over year in Q1 to $1.6 billion. Pretty impressive for a company that just 5 years ago was only doing a couple $100 million a year. We continue to gain traction with our customers in the industry, and we're seeing really good progress as we monetize and we create a more robust system. $168 million of adjusted EBITDA in Q1. It was also impressive. And our second consecutive quarter at net income positive. So we've proven out the model. We've proven out the fact that we can be financially successful. And we're excited to see where we can go from here.
But if we take a look at your share price, Alan, it is down just under 30% year to date. And, it feels as though the market's looking at results, very strong results, but it still can't shake off a sense of perhaps fear that a chunk of DraftKings growth is at risk from the rise of prediction markets. Can you talk about what it is that DraftKings is doing to mitigate that concern?
Yeah, this is one of those ones that definitely causes a little bit of confusion internally as we see the prediction markets opportunity as incremental to what we're doing at DraftKings. The key fundamentals of what makes a company, or what will make a company successful in prediction markets, is very similar to what we already do with our existing products in sportsbooks and iGaming. Our deep understanding of what customers want to get out of the experience, how it should be working, and how on the back end a market maker or a sportsbook should be treating its customers and pricing these risks. We already have fundamental capabilities there. So we understand the concern that the market is worried about. We also think we're extremely competent and capable of capturing this new market and engaging with it. And we think it can be an incremental opportunity to what we are already doing.
Let's talk about the incrementalism, because there is a part of the narrative in the markets that I think helps to explain some of the share price reaction, which is perhaps this isn't incremental, perhaps prediction markets risk cannibalizing your core sports betting offering. What's your perspective on that? How do you answer that concern?
So we're a very data-driven company. We're always looking at the strength of our cohorts, our player activity, the engagement we have. We look at metrics, not just the revenue per player, but we look at their paid active days, their time on app, how engaged they are with the product, because we're trying to optimize the experience. And what we're noticing is for our existing cohorts, no impact or no discernible impact from prediction markets on their behavior.
And why do you think that is? Just break it down for us from the user perspective. Why is the user choosing one versus the other at the outset versus having displacement? What is it about the product that is really captivating to one segment of the market and not to another?
Yeah. At this point, prediction market products are still very nascent in their offerings and what they can allow players to do. When a person makes a bet or a trade on a sports event, what they're trying to do is tell the story of what they think is going to happen in that event. And sometimes that's who's going to win. It's very simplistic. But sometimes it's who's going to score points, who's going to get rebounds, who's going to get assists, who's going to score a touchdown, who's going to get a hit or a home run. And so these markets, and especially combining these markets into parlays or combos, allows them to tell their own story in a way that is more exciting to them. And so prediction markets, as the product is evolving, and it is evolving very rapidly, it doesn't have the hundreds of thousands of markets that a sportsbook has that allows each person to tell their own story about what they think is going to happen in the event. The market is going to evolve, and prediction markets will get more complicated, and will allow more and more of these markets in the future. But sportsbooks already offer them today. And so if you're a user that is used to being able to get on the app and to tell your story in the form of a bet, there isn't an incentive for you to switch over to try to tell some lesser form of that story on a prediction market yet. Now, the market is evolving, and this is where we're really excited for what's going to be growing in the prediction markets and our ability to play and to engage in it. But we'll have to see how it evolves. The other thing, though, that makes this a really powerful story for DraftKings is with our super app, you will be able to, in New York, do sports betting. And then when you move to California or travel to California, you'll be able to open it up and do prediction markets. And so you'll get the best of whatever experience is available in whatever jurisdiction you're at. And so we're also excited to unify the experience, and we think that's another one of these advantages that we'll be able to have when competing in the prediction market space.
Do you mind talking, Alan, about the regulatory landscape? Because we're seeing a move towards greater regulation of prediction markets, right? We've now seen members of Congress basically saying that they're not going to use it, right? There's going to be a ban on prediction markets for legislators. We are seeing a lot of press at the moment arguing that a very, very, very small portion of prediction markets users actually make money. And so the analogy with gambling is picking up steam when you read the public narrative. So how do you think prediction markets is going to evolve as regulations look as though they're going to tighten over time?
The tightening of regulations is sort of an inevitability for any new sphere like this. And you fully expect when it first starts, people don't understand what the risks and what some of the integrity issues could arise. And as you understand them and you try to track down where they could come from, you see an increase of regulation. And so we're really happy that the CFTC, for example, is engaged in rulemaking right now and trying to determine the right way to create rules around this. For certain insider trading type of activities that could be done on these markets, such as by legislators, we think it's important to preserve the integrity of the markets. You know, we believe customer experience is paramount to the longevity of this industry. And so if you feel like you're trading fairly on total information available and everybody's at a level playing field, that's exciting and it's a way to bet your opinion. Or trade your opinion. If, on the other hand, you feel like you're trading against somebody who knows the answer, that doesn't feel good or is fair. So one of the things we do on the sports betting side is we work very closely with the leagues. We track bets and activities to make sure that we're understanding if somebody is placing a bet that implies they might know something, and we work with them with the leagues on integrity issues, and we've been able to very successfully help eliminate a lot of players and others who are trying to game the system for their own reward. Those sort of integrity controls are paramount to this being a long-term success.
And are you doing those same kinds of partnerships, Alan, on the prediction market side?
We will, because the long-term value of the industry is for people to trust that the industry is fair. And if you don't create these controls behind the scenes, they will never feel like what they're getting is a fair experience. Nobody wants to be betting against a sure loss. And the prediction markets, as we stand up trading at the company, needs to make sure it's following the same standards.
Let's talk a bit about the super app, which you just alluded to, Alan, and this idea that you could sort of migrate, depending on where you are geographically, to different kinds of offerings. Talk about the different steps that DraftKings has taken in creating a super app. Where is it today and where is it heading?
Well, the good news is we've already started the full integration of different products, and we have sort of we have a version out now that's actually very powerful indication of what it could be. But you know, historically we've launched a different app for each product. Mm-hmm. I think at one point we had 7 different apps. And so if you're a user and you're saying, I'm moving between states, and we have a very mobile population here in the U.S., whether it's for travel, for vacation, or for work, hard to keep track of what's available in what jurisdiction. And so the thought behind the super app is that regardless of where you are, you can open it up and it will show you what's available in the jurisdiction you're at and the geography you're at. It's a powerful differentiator because we do work with the states on geo-fencing the players to make sure that we know where they're at, and it creates a differentiation from a lot of the prediction market operators who don't necessarily have that capability now. But it gives you the flexibility, or any of the users the flexibility, to know that wherever they're at, they're following the laws and they're adhering with what the best is available in the location that they're at. And you know, it's going to be a rollout of functionality over the next few months, but we're pretty excited about what we have in store for the NFL launch and in the lead up to that.
And just to be clear, that's combining together sportsbook, predictions, casino, and lottery into one place.
And horse and our Pick 6 product.
Got it. And so some others too. Can we talk about where there may be extensions for the super app? DraftKings has really built its name on sports. But you have shown a willingness to go outside sports. You bought Jackpocket in 2024, which moved you into lotteries. Is there a world in which we could see you moving into stock trading?
I can't necessarily speculate on what we're going to do long term. We'll have to wait and see how we do on the prediction markets and where that evolves. It's not off the table, but we do like at this point to view ourselves as a for money entertainment company. And so whether that's putting $2 down on a lottery ticket, or whether it's engaging in peer-to-peer fantasy, there's something thematic about how we engage with our customers and how we work with them, and the experience that we like them to have. And right now, we're going to stick with our wheelhouse and go with what we're strong at, and we'll see how that evolves.
So that's with sports. But can you talk about prediction markets and the applications to other kinds of outcomes that folks are looking at? So maybe it's not going to be stocks if that's not something you're focused on, but political outcomes, election outcomes. What about that part of the prediction markets offering and that being a little bit outside of DraftKings' historical wheelhouse?
Yeah, we as you know, acquired Railbird late last year, which is a DCM, and we do plan on having a prediction market exchange, and are inviting market makers to participate in that. With a very strong customer base coming into that exchange, we feel like market makers for things like Oscars and for political events and currencies and crypto will obviously want to put their markets up to those customers and see what they take. And so with an exchange, we're happy to engage with market makers who have the expertise and the models to be able to put those markets up and let them have access to the customers and to the ecosystem that we plan on building on our Railbird exchange. We probably won't be doing the market making. That's not to your point, that's not our wheelhouse. We have great models for what the next pitch is going to be and whether the player is going to hit a home run that day. A little bit lesser on our modeling for who's going to win the Actress of the Year.
And now a word from KeyBank. Successful businesses don't spin their wheels, they evolve. And in order to keep up, you need a bank relationship that evolves with you. Every business is inherently different, and that's why with KeyBank, you'll never receive one-size-fits-all solutions. Their expansive team of experts across industry verticals develop bespoke solutions to your ever-changing challenges and opportunities. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B. That's key.com/B2B. But Alan, once you let come onto your platform folks who are offering the ability to take stakes on outcomes related to crypto and currencies, aren't you already in the financial markets aspects of prediction markets at that point? Why not go just all in?
We definitely are leaving our options open, but we're going to start up front focusing on what we're good at, which is sports. And we believe that foundationally, 90% of the volume on prediction markets right now is sport related. And so we'll focus on that and make sure we're winning there. And then we'll take the next step as the data seems to imply we should.
Let's talk about some of the content partnerships that you're putting together at DraftKings, Alan. Last year, you became the exclusive official sportsbook and odds provider of ESPN. Talk to us about how that partnership is going.
We love it. We worked with ESPN a few years ago. We were the co-exclusive partners with Caesars. They have great assets. They've got great media. They've got great talent, and we really enjoy the partnership. They were looking for something a little bit more exclusive, a larger deal, and so they partnered with Penn for a few years. When there was an opportunity for us to regain the partnership and work with them again, we, of course, snagged it with an even better understanding of how we would use their assets and what we wanted to do with the relationship. So, and ESPN obviously isn't the only major relationship we have. We also have one with NBC and with Amazon. The integrations that those make available to us, the content, the ad, we just feel really good about our ability to execute when we've got top national talent, brands like that are working together with us.
And when we follow this through, Alan, to try and see what the impact of a content partnership actually has on your revenue, can you just put some numbers around it? What does that kind of exclusive partnership translate into for your bottom line for investors?
we see a better share of the total volume, for example, on different sports that they sponsor, and this was one of the reasons why we wanted the NBC and ESPN contracts, specifically around, for example, NBA. For a few years, FanDuel had an exclusive partnership with TNT, and as a result, had an outsized share of the NBA market. And over the last few months, as we've started to integrate in and have a better access to ad content and integration, we've done very well, in my view, on NBA, and it's just beginning.
Some others have taken the approach, which is actually to go to the leagues directly. The UFC, for example, struck a partnership directly with one of your competing prediction market services providers. What are your thoughts on taking the approach of going to the broadcasters as opposed to going to the underlying leagues?
Well, so we do partner with the leagues to varying degrees on the sportsbook side, and I found that it has value to it. I will say that some of the pricing for that has been increased due to the rise of the prediction markets. We're very analytical in our approach to the value. We understand our customer cohort strength. We understand the monetization value that comes from having a partnership and being an official partner. There are nuances to ad content availability. There's nuances to what you can get from them. But there's a price and there's a value, and if the price goes above the value, we're very disciplined in walking away and saying that this isn't justified. And so we do have great partnerships with leagues. We love our league partners. They're fantastic to us. And we pay the appropriate price for the assets that they make available to us.
Let's talk about a different perhaps impact on your bottom line, which is with respect to taxes. We saw last year a couple of states increasing their taxes on sportsbook operators, and there's sort of been this drumbeat that, perhaps this is a place to try and get more tax revenue dollars come in through increased levies on gambling. What's happening with that, Alan? What's the landscape there?
Well, I'm happy to say, cross fingers and knock on wood and all, whatever anti-jinx you want to put out there. But this year we've done a fairly good job of communicating with the state regulators that increasing taxes on nascent industry can have an impact on growth. And they're actually starting to see it in certain states where they've passed some pretty onerous taxes. And as a result of that, the industry has stopped its growth where other adjacent states are still growing. The truth is taxes are a burden on the growth and the industry being able to capture its full potential, because there are alternatives out there that are not taxed.
What are they, Alan? What are the alternatives that aren't taxed?
They're great black market operators, illegal operators. It's really easy to log onto your phone and to download a offshore sportsbook or an illegal casino app and be able to play with that. And the experience is almost identical to playing on a legal app. Mm-hmm. The difference is, obviously the legality, and legality is important to many people, and they're willing to play on a legal sportsbook if they can. But if they're spending $100 on the DraftKings app, and we give them back $30 of reinvestment back into them, whether it's odds boosts or deposit bonus or free bets, and then we're having to pay out a significant portion of their revenues in taxes instead, we lose our ability to have the same level of generosity that the offshore books are able to do. And then the other side of this, obviously, is if consumers are on the legal sports books, they get protections. If they have an issue, they can go to their state regulator and ask for help. And if it's an offshore book that they have a problem with, they're out of luck, and the book can just ban them and move on. And so we do feel like, from a customer experience perspective, it makes a lot of sense that they have a sports book or a casino available to them that follows the rules. But we understand that if the states make it hard for us to compete fairly with the offshore books, then it's going to hurt the overall industry. And the good news is most of the regulators, when we talk to them about this, they understand that. And there's definitely pressure to raise taxes and to fund the government, the things that they need. But they also recognize that you can't overtax an industry and expect it to be successful.
But in the meantime, you're going to have to mitigate these tax rate increases, Alan. So have you guys been leaning into cost cutting? Is there a program that you've got in place to try and find ways to offset this? What's going on when I look at you operationally to try to focus on margins?
Yeah, there's a couple of things we've done, whether it's reducing promos in the States is the easiest one to do because it's almost invisible to customers. Definitely reduce the marketing spend. Remember, as the cost of taxes go up, the lifetime value of the customer goes down, which changes the threshold by which you're willing to at which you're willing to acquire new customers, and so customer acquisition costs need to come down. But we also work to pass along the costs. For example, in the state of Illinois, we implemented a per bet per wager fee to offset a specific tax that they passed there. Overall, the industry around the globe has found ways to offset these taxes through various means organically, and we're going to do the same thing. We do think that we have seen internationally that sports betting companies, regardless of the tax jurisdictions they're in, are able to get to 30% EBITDA margins. It does mean different parts of the P&L are affected, and sometimes it's cost cutting at the bottom line. But we're very confident in our ability to get there. On the plus side, and before we get off the thread of maybe the taxes, what we have been noticing is that the threat of prediction markets in the regulated states, and the understanding that one of the big benefits sportsbooks have is that they have the ability to be generous to customers and do they give their reinvestment back. States have been less eager to raise taxes. As they evaluate the threat of prediction markets and its potential to maybe in long term cannibalize their business. Now, again, we're not seeing it, and we don't operate prediction markets in any state where we have a sports book because we want to respect our regulatory partners. But we're not competing against ourselves, our own prediction markets in the States. We're competing against other prediction market operators who it starts to become an issue if there's cannibalization because the states are taking all of the profitability and we can't offer the same product to our customers that they are able to.
So last question for you, Alan, which is take a quick look at your balance sheet. At the end of last year, you had over $1.1 billion of cash. So you've got a lot of liquidity available to you. Any plans there in terms of either being acquisitive or returning cash back to shareholders?
We've been buying back shares. We bought back $100 million of stock in Q1, almost $100 million of stock in Q1. And we'll continue to buy back shares with our excess free cash flow. No acquisition plans right now. We are focused on winning in the U.S. market. We think that's a differentiated advantage that we have one market to focus on. And we can think very holistically about how do we win here. The cash is there. It allows us a lot of comfort to be able to do what we want to do with the business and do what we need to do to win. But we have no plans for how we expect to use it other than to continue to invest in core growth for the nascent markets that are growing. I mean, the predictions are exciting. There's for all the drag that has been on our stock. The truth is, we think it's a $1 billion plus long-term TAM, and it makes a ton of sense for us to go aggressively after it, given our core strengths in these exact markets. So feel very good and feel positioned to win.
Well, it's a big couple of months coming up, Alan, on exactly that front. There's a number of Senate hearings. There's a lot going on in the prediction markets regulatory environment. So please come back. We'd love to hear how it's going. It's a big year for DraftKings. I'm Anne Berry, and thank you for tuning into After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends. Upcoming episodes will feature CEOs and CFOs from Match Group, Twilio, and many more. See you next time.